Hey guys, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, let's talk about Energizer, the bunny that keeps going. When I think of Energizer, I think of the batteries, the bunny hitting the drum. But let's talk about the stock. I think right now it's trading at $27. Is that high? Is that low? Let's look at the chart. Let's look at their financial data. Let's see if it's undervalued or maybe if there is some potential to start adding. Let's jump right in. All right, we are on finviz.com, the best website in the world, and we are looking at the stock Energizer, the Energizer bunny. Boom, 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 boom. So I'm showing you the monthly chart right now, but let's go down and look at the financial data points. We can see that this monthly chart is essentially in one long hump downtrend. So what I want to determine here is number one, is Energizer a good stock to buy? Yes or no? If so, what is the price that would be fair value for it? What would be the price target? And are other people interested in buying Energizer in terms of insiders and institutions, hedge funds, big banks, uh, venture capitalists? So let's go ahead and scroll on down. Okay, let me see if I can rearrange for you guys really quick. I just want to make it bigger. So I'll just make it bigger on the screen and then I'll move it around. Whoa. Okay. So we have 3 billion in sales, 200 million in income. That's amazing. Almost a 5% dividend play. I did not have Energizer as a dividend play, but that's pretty big. Price to earnings 9. Forward price to earnings 8. That signifies that this is undervalued. So now I'm excited to do the math on this one. Oh, look at that long-term debt. 7. Debt to equity 7.2. That debt is expensive in this environment, which is why the price is going down. That's a lot. Earnings per share this year, 347%. Earnings per share next year, 7%. That's pretty low. If we look at earnings per share over the past 5 years, it's positive, but pretty low. Sales over the past 5 years, 13%. Pretty steady, but you know. Insiders only own 0.3% of the stock. That's not much. And institutions own 86% of the stock. Insiders have been selling just a hair, and institutions have been buying just a hair. Gross margin is 37%, so this kind of acts like a dividend growth company. So that means this could be pretty volatile and it pays a dividend. So if we can coordinate where we think the price could go, this could be a good buy. Shares flow and shares outstanding are about 70 million. We don't really need to differentiate there. Shares outstanding means that's how many are out there, including stocks available for company packages. And then also the shares float is how much is available to the public. And we have 7% short here, which is decent. The target price is $34 by analysts. That means this is undervalued because it is under the target price. But people who make the target price are a little cuckoo, so we don't really trust analysts. Plenty of volume here, 679,000 on average, so it's pretty liquid. Let's open up our handy dandy calculator. We're going to look at and see what the fair price should be for Energizer. We are not going to look at the income as part of the sales, even though I like to. This is a larger market cap company, so my method here might be a little off basis. So if we do 303,000, so this is going to be the 3 billion in sales right here. And we're going to see how many shares, we're going to see how much per share is the value. So basically, we're going to take the sales divided by the shares. Super general high level term is if you have a lemonade stand and you make $100 a year and you have 2 shares, $50 a share, essentially is how I look at it. But that's for smaller cap companies. Um, so we'll do two methods here. We're going to do my very conservative estimation, which is basically the sales divided by 100 million. And that's going to give you the fair stock price. And then we're also going to do the sales divided by shares outstanding, just because we would normally do shares outstanding and shares float, but because they're so close, we don't really need to. So let's do this one first. 3 billion sales divided by the shares outstanding, which is going to be 7130, 71,300,000. So we have a fair share price of around $42. And that's pretty decent. And then if we go our very bare bottom, this is more so for startups. So you do the sales divided by 100 million. So we have a price of $30 and 42. So 30 plus 42 divided by 2. That's not right. 30 plus 42 divided by 2. So the fair price target rate is 36 on average, and then analysts have it at 34. So you can see we're kind of close. Maybe I could become an analyst, but I don't really want that title. I don't want to be associated with those guys. So $36 is what I'm getting. Looks like Morgan Stanley has 35. That's what I have. Yeah, I think that's Morgan Stanley and Jefferies. So pretty good. $36. Right now it's at 27. So that's right there alone. That's good value. However, we do need to look at that debt. That's a lot of debt. 7. I don't like to look at anything over 1. So red flag there. Let's just scroll down. So their revenue is increasing. If we look at 2020, 2021, 2022, it's trailing 12 months, so it'll be a little bit more, but it's not finalized. Net income is growing. That's good. Okay, let's see. Balance sheet. Ooh, balance sheet. Total assets 5 billion. I believe that's B, 5 billion. Total liabilities 4.6 billion. It's cutting it close. Let's see. Long-term debt 3.2 billion. These are in millions, right? Values in millions. So if it's comma like that, that's billions. 3.4 billion in long-term debt from 4 billion. So it looks like it's going down. They're paying it down, which is good. We like them to pay it down, but total long-term debt, okay. Again, total long-term debt, it is increasing. It did decrease from 2020 to 2021, but it grew in 2022, trailing 12 months. So their debt situation's getting a little too hot and heavy. They should consider paying what they can off. So that's okay. And if we go to Energizer on Thinkorswim, we're just going to see what we can chart out. And this is what I have charted previously. So we have, you guys can see, so we have low here, sell, low, buy. So it's buy, sell, buy, and then right here it kind of breaks the pattern. So history does not always repeat itself. So looking here, if we create a support line from this to this, it gives us the 24-27 range. And we are at the bottom. It did hit the bottom of that range. And it looks like Energizer's trying to fight this short-term resistance right here. Overall, I think there's probably going to be more downside in my opinion. Let's just start with a fresh slate really quick. Let's just call this 2022. All right. And if we just start from the high to the resistance there, And we have that there. But now if we go from here, come on. You go pair. No? All right. So we have strong resistance there because we have didn't break here. Let's zoom in. Sorry. Okay. We have resistance, didn't break, didn't break. Now what we could see happen is a little accumulation here, but honestly, this looks like a big bear flag in my opinion. We have the flag pull going this way, and then it's going to flag a little bit, and then going to get rejected and pop down. So let's look at this. I'm going to adjust my screen real quick. Okay, so let's go here to... That's fair. So this goes all the way down to 13, which could happen. It's a very sharp drop. We don't want to rule anything out, but we will see apex right here. We will see, come on. We will see a make or break right along in here, right in time for earnings. So funny. Let's see. What's their estimated? Earnings on November 15th. Okay. Oh, it doesn't have what their earnings are supposed to be. I'm sorry, the EPS. So, I think this is something I would slowly dabble into. Let's look at momentum. So we want to see light red for the MACD here for the momentum. All right, so we are seeing some light red right in here. Let's scrunch it down a little bit. Look at all this selling. So much red. So much red right in here. This is ugly. I foresee, you know what? I foresee some ugliness in Energizer, honestly. But I do like where I like their income and everything. I think that's really good, but yeah, just so much selling. Too much selling, honestly. Um, so that's a little crazy. If we look at the yearly MACD, the yearly momentum, sorry. Yeah, we can see that it's just getting started to the downside. And my chart on the yearly looks pretty kind of accurate to where it could be. So we could go bright red, bright red, bright red, light red, and then see a reversal over here. So not too bad in my opinion, but I think it might get uglier before it gets better. So Energizer looks appetizing right now, in my opinion, but I think we need to be really cautious because of their debt. Their debt is huge right now, and just the resistance is so strong. Like, yeah. So I think we'll come to a make or break. We might see a little pop up here next month when they have earnings. A little touch here, and then a drop. So I don't do options, but I might have some cash freed up to do a little bit. I think I would do options going into earnings just because their debt is just crazy. Yeah, I don't really see insider. I mean, insiders bought a little bit. It looks like the CEO bought 91,000 worth at 30 and a director bought $50,000 worth. Another director sold 160,000. So, yeah, tough to say, but Bill Armstrong, nope, he didn't get any options either. So, CEO got 6,500. Yeah. So, I would wait. You can't go wrong waiting in my opinion. Um I think I just think their debt's pretty astronomical. If they have 3 billion in debt and they only make 206 million, what am I missing here? Okay. Income. 214 million. And net debt though. 3.2 billion? It's just a big hole to get out of. My glasses, sorry, the reflection. Yeah, I think this might go lower, but I think it's going to be a good dividend um, company once it gets its debt figured out. So I'm glad we analyzed this together. So I'm not a buyer of Energizer here. I think I would more so be a seller, only because their debt situation is not pretty. They went from 7.24 to 709. So they're paying their debt back. They're being fiscally responsible, but it's just a mountain right now. And their quick ratio is at a perfect 1, which is a strategy. They're strategizing their debt. So yeah, I would be maybe short here. I would not be buying until let's see what their earnings are like on November 15th. That could be a game changer. But for Energizer, I'm at a hold. I'm at a not buy or sell. Just be where you're at, in my opinion. I think I would take out options on November, around November. Probably on a day when we are surging to the upside just to get that premium. So let's just check here. We had 19.2 million volume last month, 8.8 volume now. Oh my God. Yeah, not looking good in my opinion. It's kind of a fake move for the month of October. So yeah, I would say wait till we get down to the teens, in my opinion, on Energizer. But other than the debt, if they can clean up that debt, they're a beautiful, like long-term growth dividend company. I would definitely add them to my dividend portfolio. So there you have it, folks. I'd say Energizer is going to be a buy around 13, unfortunately, but I think even now they're considered a good hold only because you're getting that dividend premium. But they do have the debt, which needs to be cleaned up, and they might be addressing it on the conference call. So, which is going to be in a few weeks. No, not a few weeks. It's going to be here soon. 2.5 weeks. No, three weeks in a day. So yeah, thank you guys for hanging out with me. My analysis is never perfect, but I do hope you gained a little bit of value out of this. I hope you have a great day or night. Talk to you later. Bye.